Hello, good morning and welcome to today's More Report chart appraisals on Thursday 27th of October with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively sort of neutral-ish outlook, I suppose, on markets today. Equity markets were mildly weaker in the open. They've actually now turned slightly positive, but generally speaking across the Forex markets is relatively stable. There's not a great deal of movement on the dollar. Trade-weighted dollar relatively flat on the day. You've got mild sterling weakness, which has sort of come after a bit of a rebound actually yesterday that we saw, about 60 ticks up on cable. Sort of retreated slightly today. That retreat has come ahead of the GDP data, which I think is going to be a big impact on markets today. You're going to get a view on Q2 growth for GDP in the UK, and that's Q3 growth, and that's going to be the first quarter clean of Brexit. So the market will be really taking notice to exactly how Brexit is impacting across the UK economy. And growth is expected to come in at plus 0.3%. Let me show you. Here we go. This morning, plus 0.3%, which on the chart is just mildly lower than sort of the average, which is around plus 0.5%. But considering the Bank of England had been sort of fairly gloomily forecasting plus 0.1% for this quarter in the wake of Brexit, then that possibly could be considered to be a bit of a strong quarter or strong showing, as the consumer continues to hold up the UK economy. But it'd be very interesting to see what that impact has on sterling, because it could feed through into monetary policy. Monetary policy at the moment is obviously on a loosening path, following on from Brexit, and that possibly could be even further loosening in November. Will GDP change that? Will a strong GDP number change that? So that's what the market will be questioning today. Now, across other economic indicators or economic releases today, we've got a bit of US data. The durable goods ex-transport is the one that we look at. It is the core data, plus 0.2, up from minus 0.4 last month, so that would be considered to be relatively positive number. Jobless claims again, 255 is the expectation, so 260 was arguably a little bit high last week, but 255 sort of back down a little bit. And then into the afternoon, we've got pending home sales plus 1.2% is the expectation there. So relatively supportive for dollar if that data comes in line with expectations, you would imagine. But generally speaking, today we are sort of looking out for sterling and UK assets, I think, from this GDP data. Now, we've got my chart today, which is silver. Now, this is the sort of longer term chart silver. I wanted to show you a few key levels. 1850, which is the old key resistance from 2015, became supportive, and that is, I think, again now a big resistance area. But look at these, 1780 and 18 figure are the two lines of old key highs. Now if you sort of zoom that forward to where we are now, you can see that we're sort of struggling around the 1780 mark, and between 1780 and 18 big figure, I think that's a key area of resistance near term. That is preventing, I think, this recovery going, because the recovery on gold has been pretty strong, but the recovery on silver has not really got going. Yes, you are in an hourly chart uptrend, but it is really struggling to sort of break through, and you could argue this chart is sort of really struggling around that, as I said, 1780 mark. If I zoom out, you can see 1780 is a real sort of near-term area of resistance. You've sort of seen predominantly, I'd say, a more neutral outlook on these momentum indicators near-term, as opposed to a recovery outlook on gold. What sort of implications do you take for market sentiment from that? Generally, silver tends to outperform gold when market sentiment is positive. So this sort of struggling recovery on silver is a concern, I think, for me. 1780 to 18 big figure is resistance. Breaking through that, I think it's going to really struggle to get above 1850. I think that would be where you'd see the selling pressure coming back in, because look at these sort of lower highs on the RSI. Momentum indicators much more correctively configured. It sort of suggests to you that rallies are a chance to sell. I think it's more of it's going to be more of a developing sort of medium-term consolidation, rather than a significant sell-off on on silver, but generally speaking, I think the overhead resistance between sort of 18 figure and 1850, I think is going to be quite considerable, and there's going to be a lot of sellers in there. So with that in mind, I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.